Hello, fellow dividend investors. Are you ready for our investing journal day 2? Today we'll buy some blue pills.
Yay!
No, we are not really buying pills. We'll be investing in the company Pfizer just because our dividend screener ranked it very highly. And it's the second stock our broker allows us to buy. In total, it was the 4th best ranked stock in our screener we built on dividendexplorer.com. Our plan did not allow us to buy the first and the third ranked stock because our broker is not allowing fractional shares of those stocks. So we had to move down the list and invest in Pfizer. Unfortunately, the second stock is also in the same sector as the stock we invested in yesterday, Merck. This means our portfolio isn't very diversified yet, since we are only invested in pharmaceutical stock. But maybe that's not too bad, because as you probably know, at the time of making this video, we are in full pandemic, and pharmaceutical companies are one of the few that are still in business right now. So the earnings of these companies won't probably be affected as much as the earnings of other companies. Before we continue this short analysis, I would ask you to like and subscribe so you can also motivate me in my journey in investing in this dividend portfolio. Thank you very much. So Pfizer is really doing well when we look at the earnings. Also the dividend is great. It's 4.39%, and they have a profit margin of more than 30%. They have more equity than they have debts, so they are in a very good position. Pfizer has also been raising its dividend for the past 5 years. But when we look a bit further, the dividend has been a bit of a roller coaster, but they seem to have controlled their finances in the last decade. The only thing that worries me a bit is that in the last 20 years it didn't really beat the S&P 500, and the valuation fluctuated between $120. As you can see, the compounded growth rate is much lower than the S&P 500, the 500 best. But as you can see in the graph, Pfizer has had their act together in the past 10 years. So the results in the last 10 years were much better. So it's time to open our app and buy the Pfizer shares. We can buy 1.4 shares. Yay, that's more than one share, so very happy about it. Since I use market orders, the order was fulfilled very quickly, so in a few seconds, and immediately the stock started to rise. It was not like yesterday when we bought the Merck stock that it started to drop. Even though we bought at opening, we just bought it in an upward wave. That's something I would expect from their famous blue pill. So thank you, Pfizer. But it doesn't really matter. We are not really looking at immediate returns. We are buying healthy companies, harvest dividends, going into the market in small shares at a time, and taking very low risk. So here you can see our portfolio, where we have our two investments, Merck and Pfizer, both about 50% and both about $50. I'm using Trading212 as a broker because I'm not a US citizen. If I'd been a US citizen, I would probably be using M1 Finance or Robinhood. Maybe M1 Finance because I like the way it seems to work much better. The Trading212 is for now my only option. So for now I'm up almost $2 and I'm eagerly waiting the future dividends. It will probably take at least 2 months until we see the first dividends coming in. So tomorrow we are doing another trade. We are going to invest in the food sector. So thank you for watching, and see you tomorrow.